If you're invested in a bank, you might be a little bit worried about their stability and if they're going to become insolvent, because the recent collapse of Silicon Valley Bank and Signature Bank New York has made investors more than a little bit worried, and rightfully so. But as I understand it, in a nutshell, they mismatched long-term assets with short-term liabilities. Now, some banks have higher risks, and more conservative investors like myself may want to avoid those, but assuming that the government's actions can prevent any further big issues, there shouldn't be too many more surprises on the horizon. Now, SimpliSafe Dividends, where I am a member of, put out a really helpful email and spreadsheet where they assessed 59 of the most relevant banks. Most of them are regional banks, and I thought it would be really helpful to share it with you, so I've converted it to a spreadsheet format, and the link is in the description below. And once again, this was for members only, so you're getting a little bit of a behind the scenes look at what it brings here. On the tab at the bottom, if you click that, you will see that I uploaded some screenshots of the entire email, because quite frankly, there was a lot of really good information. So I would take a good 10 minutes to just sit and read through it, and then click that tab to get back to the bank risk assessment spreadsheet. So what might be most helpful for you is if you go ahead and make a copy so you can do some editing and move things around, like hiding the very top header right here, and then getting this logo out of the way by just deleting it. And then you'll see the definitions of everything that is headed in the columns. Like the CET one for first source here, you see 13.2. As I understand, that says that they have $13.20 to cover every $1 of depositors' money in their bank. And then they have a column here for the unrealized losses, which modifies the ratio and includes the bank's unrealized losses and gives a little bit of a more comprehensive look at the bank's capital strength. You'll just see more deposits, liabilities, the deposits as a percentage of the liabilities, and then uninsured deposits. The higher the number, the more prone the bank is to having those depositors pull out their funds. But if you wanted to search by the deposit growth, then just click that column up there, sort Z to A, and you can see here that the deposit growth was highest for Bank First, ticker BANF. And these two columns are pretty interesting right here. Exposure to uninsured deposits and unrealized losses. If we click and sort that one, starting with the medium lowest, Cullen Frost at the top, and then we can work our way down to the highest, and we see that Silicon Valley and Signature Bank New York, of course, were the two that failed. And now in the email, SimpliSafe did point out that these are the most at risk, but due to their data limitations, they didn't consider hedges a bank might have to provide some protection against interest rate fluctuations and the unrealized losses they have caused. So again, this is not a comprehensive, complete all-in-one list, but it's just to kind of give us a heads up. And the spreadsheet definitely will help by giving us a little bit of a more in-depth look into the banks and some of their current financial situations as things are right now. Interestingly, if we look at the gross unrealized losses, we see at the tippy top is Bank of America, ticker BAC. And I'll have a link for this down below. If you are a Seeking Alpha member, feel free to check it out. If not, you can sign up, use my link below. It's an affiliate link. You can get 59% off your first year, but there is a really cool article about ignoring the $114 billion of unrealized losses, because as you see here, they say that the fears largely stem from a misunderstanding of accounting rules, and a new Fed support program has removed most of the risks. And because of that misunderstanding, the author concludes that Bank of America could double by the end of 2025, and they do rate it at a buy. And just like the Seeking Alpha author says that Bank of America is a buy, I also have 3 cheap stocks that I think are a buy right now, right here in this floating little box next to my head. So if you click that, I'll tell you all about them there.